Joining us now with his top picks into those numbers is Brent Thill of Jefferies. Brent, it's great to have you on. I mean, we saw the first of the mega caps report this week. Tesla was one of the worst performers in the S&P, but I also realize it's a little bit of an outlier. You can't really read through too much from that company to some of these other names we mentioned. How do you like this setup going into earnings next week for mega cap tech? What would you be buying ahead of it?
I think there's a lot of tension into next week. We have conflicting data points. We have a lot of AI hype and expectations that I don't think can be met. You look at Oracle today, down 6% on them saying no AI revenue for the fiscal year, and the stock goes straight south. So I think it shows you how tender some of these tech names are. A lot of the hedge funds are still short these names, or they're out, and the long only still have conviction. So I think it's a tricky setup given some of the tension and given we've had a pretty good run year to date. So we're going to continue to need to hear progressing news. Going into next week, we like M&M, Microsoft, and Meta. Microsoft, obviously, the tailwinds of AI starting to kick in. Expectations, stocks come off from 366 back into the low 300s, and we think their AI lineup is going to be very powerful as we go into next fiscal year. And also for Meta, we continue through our checks here, consolidating spend to the Meta platform. We're hearing movement away from those of Snap and other point solution advertising back to Meta and Google. And we think the comps are easy. They should continue to accelerate revenue growth as we go into next year.
Okay.
And they've spending less time on the metaverse and more time around AI is a good thing.
Yeah, I mean, we are seeing this large investment cycle into AI play out. To your point, and I guess perhaps looking at Microsoft and what you just said there, how to balance the investment portion of this versus the beginnings of the realization of monetization for it?
Yeah, I mean, I think the analogy is this is 1995, 1996 ahead of the internet. You want to be long a number of these names for several years into this AI wave. So we think the parallel to the internet is a good one. Sundar Pichai, Google, said AI is bigger than the internet. So if you believe him, and he's a pretty smart guy, and all the work we're doing, that we think AI will have a huge inflection in 24, 25. So the hype is above the reality. What the companies can do, as I mentioned, Oracle down 6 on them saying no AI revenue for the next fiscal year. But I think you want to be positioned into this. Any of these weaknesses next week, as we see it, a lot of these software products are going to go GA with AI into 24.
Yeah.
And you want to be waiting for that to come, and we believe you want to be positioned ahead of it.
Well, waiting for it to come, how do you perhaps position ahead of it? Because it seems like the sentiment might be pretty rich compared to, it's going to be a tough quarter, it seems, for guidance. How enthusiastic, unless you really know the check is in the mail, can you be about how good the quarter is going to be, given the geopolitical backdrop and the fact that a lot of these AI applications and models that these companies are rolling out won't start to generate revenue until calendar 24?
Yeah, and I think that's exactly the tension, which is that we've been cautious on AI in the sense that there is no product shipping right now. Microsoft's Copilot for Office 360 or M365 ships in November. So there is no revenue in this quarter, right? It's the calm before the storm. And I think ultimately investors are going to react to what's about to hit in the next couple quarters. And that is a sea of new incrementally priced solutions. So yeah, the excitement's probably a little overzealous. We're a little over our ski tips as it relates to the excitement for AI, but we think it's going to build and mount. So any of that weakness post this print, you should be buying ahead of that. This quarter, I agree. It's a lot of tension.
Is there any port in that storm that you see, or is it across all software?
I think, look, right now, the best AI stories are Adobe and Microsoft, hands down. They are crushing it relative to anyone else, right? Okay. Others are further behind. So we see those two as having the best AI technology that is monetizable ahead of the rest of the software industry. So I don't think there's a safe port. I think Microsoft, in a tougher environment, will be safer given the diversity of the business, how well they run it, and effectively, we know there's a massive uplift in pricing that's about to hit, and the reviews are getting better.